Welcome everyone, and today we're going to be discussing a framework idea that you can utilize practically with any strategy. Really, this is just so you can use it as a filter when you're trading. So, many times we get a little bit overwhelmed as traders when engaging in price day to day. But I hope with this idea, this toolkit that you could utilize when engaging in price action, you can filter out those days that you know are low probability or you have that FOMO or things like that. This will give you that double edge that you needed that you didn't have before per se. So I'm going to be utilizing NASDAQ here. We're on the daily chart. And then I'm going to drop down to the 15 minutes so I can explain what we're going to be utilizing. So the idea is going to be that with price, you're going to draw out your midnight open. I have an indicator here. This indicator is called ICT Everything by Cold Brew Roche. So if you guys want to use that one, and simply what I have here is on all the days, it draws out that midnight opening price. So if we zoom in here, you can see that right here, that midnight open right there, it drags it out. And then the highlighted boxes that you see, these highlighted areas, they're going to be from 9 a.m. to 11 a.m. So I know many of you probably trade either the 950, 1010 macros, and there will be other of you that probably are trading the ICT silver bullet during that hour. So to anyone doing those, this video is also going to be very, very insightful. But this applies to all strategies. This is just really giving you that extra boost, extra guide. That way you filter out those days that you know are going to be a little bit low probability. So what we're really going to be entailing in this discussion is simply that when price is above that midnight opening, it's in a premium. And now when I say premium, what I mean is that it's essentially, it costs more for everyone to engage. It's like if you went to go out and you bought something at regular price, but then let's say at Black Friday they lower those prices and then you buy it. It's the same thing with that midnight opening price. So you can think about it almost like this. I'm going to draw it out. I'm going to put the profit and loss tool here so you guys can see. So for example, we have current day price action, but here you can clearly see how when it's above, ideally you want to be a seller because that price is in a premium. It's going to want to draw back towards that midnight open or even lower. Not always this will happen. Keep in mind, this is just more of a filter that you can, keep in mind. It will give you a more well-rounded view on price action. And for example, here we're below, and that's going to signify we're in a discount. So smart money on the top will be accumulating shorts. Smart money on the bottom will be accumulating longs, because it goes back to that example that I gave with the Black Friday. Is that if you can buy something cheaper, of course you're going to want to accumulate that and buy it up and sell it at the midnight open. Same thing with people being sellers up here. If they're selling up here, they're going to want to sell it back to a discount back down here. So it's very, very simple, very easy to understand. And it's quite flexible and versatile where, you don't need indicators, you don't need anything. But like I said, you're very flexible to use it however which way you want. Even for example, today, if we look at price action here, we can see that price was, selling off during London and even during pre-market New York a little bit, and then we popped up fair value gap. But the premise was that price was accumulating longs below that midnight open. And look what we have here. We popped up for that 8:30 news. I believe it was core retail sales for today. And here's another example. Here we have Wednesday, Wednesday the 14th of August. So price is sort of chopping, and then that's why I added the filter so you guys can see. And then where are we? What have we been doing? Really, we've been above that midnight open, and then what happens? Smart money accumulates their shorts up here, and then they reprice lower. They go down. So with this, really what this is doing is that, so whatever strategy you're utilizing, this gives you that extra bit of boost, that extra bit of framework or rule of engagement, so that way you know what you're looking for and you want to place yourself within the highest level of probability. So quite simple. We have this buy side liquidity here. As you can see here, price sweeps buy side liquidity in a premium, which gives you more confluence, and then we sell off. And like I said, there will be days that it may not work. For example, here's a day like that. Like I said, it isn't something that you should be engaging in every day, of course, even trading itself. It's trading is something that you really don't want to be doing every single day, because by reducing that trade frequency, your trading is gonna absolutely, improve dramatically. People don't really realize that. By sticking to a strategy that's very low in frequency, it's your performance will improve, tenfold. If you really sit down and you study and back test, you'll see it. But of course, if depending on whatever strategy you have, if it entails being in every day and it's going well, don't let me stop you from doing that, and keep at it. But here's an example. Here's Tuesday of this week. Price was extremely above midnight open. It comes down into a discount. Smart money buys, and then it keeps going up during that 9 to 11 a.m. So ideally in this situation, obviously you wouldn't want to be long, because you're extremely above. Let's say, right now, if we're talking about already, you're above about 145 handles, or almost 600 ticks at the time of 9 a.m. But like I said, I'm not saying you can't, but if you want to put yourself in the highest probable situations, it'll be ideal that if you wanted to buy, you want to buy below it. And let's look at another example here. This day was a little choppy. It is Monday. I don't think there was news this Monday, but you can see it's very choppy, but the premise still stands. What does price do? We slam price right during that ICT silver bullet hour. It's practically, also for the people who trade the macro, it's right there. We slam price down. We're in a deep discount. And what does price do? It goes higher, because smart money is going to accumulate longs below that midnight opening price for discounts, and then it comes up, it goes higher, and even selling right back to that midnight open. So it's a really, really, really interesting, framework to how you're seeing price. That perspective that you give towards price is really important. Here we have Friday. Once again, another example. I believe this was NFP Friday, if I'm not mistaken. You guys can, correct me in the comments below. Here we go. So same thing. We open. We do like a Judas swing here. Come back down. Price is in a deep discount, and then we do what? We combine that time and price factor. For all of you that trade the macro or the ICT silver bullet, there you go. And what do? We trade right up into that midnight open. Really giving you that perfect edge of saying, if you took a long here, that you can get out there or do a partial, etc. And let's do a couple more so I can show you guys. So here's a day, for example, it's like I said, it's not going to work every single day. It might not even work, for example, for weeks. But it's about placing yourself, like I said before, in those situations where you're going to be the most favored. Like I always give, in my previous video, I talked about trading psychology, and giving an example about poker. If you really think about it, in poker, it's a mindset game over anything, just like trading. And if you know that, the cards you're dealt with are very low probability, of course, at the end of the day, it has its gambling aspects. But by placing yourself in those higher probability scenarios, 9 times, I would say even 7 times out of 10, you're going to come out on top. And it relates the same way to trading as well. But here's Thursday of last week. Same thing. We have a fair value gap of BISI here. We filled consequent encroachment, but we kept going up. Ideally in this scenario, you'd want to be, more short. But like I said, every day it won't work. There will be days where it just doesn't. But wow. So this is a beautiful example here. This right here, this is an absolute beautiful example. I think my indicator here is a little mixed up, because technically the midnight open was here. Oh, it's probably because they're the same. They're very similar. Okay. But this is a beautiful example, clearly right here. So we can see price taking all this buy side up here. There's buy stops up there. We run that buy side. Price is in a deep premium. It's taking the buy side. And if we really measure this out, we're looking at prices over 600 ticks, almost 700 ticks, or 166 handles. So this is really, really deep premium. But again, you don't want to only utilize this. You have to frame the idea together with something else. It's a way for you to combine it with other strategies and really get a gauge for the day. Um, you cannot only just use this as a guideline, of course, but really 7 to 8 and even sometimes 9 times out of 10, ideally the situation is going to come out that way. So this is a beautiful example of that. Price is trading into that deep premium and we sell off. And here's another example, actually, another wonderful example. So here we have Tuesday, August 6th. Here's that midnight open once again. Remember, I'm on that 15-minute chart. Price is trading down, 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 deep discount. We're talking about, this is actually a lot of handles. If you look at this, we're talking at wow, so 1700 ticks or almost 500 handles. And then what does price do during that macro? For those of you who trade those ICT macros and the ICT silver bullet, we go up and we trade all the way back up into that midnight open, because it's price being algorithmic and smart money really moving those pieces around is accumulating those longs below it, because it's a discounted price to buy. So it's going to give you those ideal setups to where you know that, okay, if I go long here or here, I know I'm good, because at the end of the day, I'm in a discount. And I know smart money wants to get at least at or above it on that midnight to then reprice and sell low. So you can see here, we're above that midnight open and we sell off. So, and it keeps going. Here we go. Here's Monday. Obviously, Mondays are not ideal for most traders. But like I said, who am I to tell you how you should trade? I'm simply here just giving my opinion and a framework that I would, if anyone would find use for it, if you guys can definitely, try using it, back test it. And we can see another example here where, price is consolidating. It's below that midnight open. You combine time and price. It's from that 9 to 11 a.m. window, and we trade back up to that midnight open. So let's do a couple more examples here. So here's again, so at least I would say 1 to twice a week. Usually it's just once a week where that midnight open won't have that ideal type of scenario that you want. But that's why you can't only just frame your your framework on this midnight opening idea. This is just a perspective that you're giving to price when you're engaging in it. But here's an example where it didn't work. So, we've been selling off heavy and it continues to sell off even during that hour. One could say, maybe you could take maybe one could possibly, see price, going up higher here, but it would really depend, and you'd have to see, are there more levels? Are there more things that price is tapping into that's causing him to go back up? But ideally you want to be, going long. And this happened right at that 10 a.m. window. So for those of you trading those macros and ICT silver bullet, there it is again. And here's an interesting one. So here we have a deep sell-off here, and it didn't go above. It came close to it, but it never did. So that's an interesting one. So there may be days where, price may come up close to it and you may want to engage in it, which is perfectly fine, as long as you have the idea and the framework in mind that you know. And here we have another example from Wednesday of July 31st, another one that didn't work. So we just kept going up during the 9 to 11 a.m. session, being above that midnight open. And here's a beautiful, so being patient and waiting for those days that price is in your favor is absolutely crucial. As we can see here, this is Tuesday here. So as we can see, price is trading into that deep premium. If you combine that with a daily time frame bias or anything else, we can see, what does price want to do? It goes lower, because price is into that deep premium. It's expensive to buy, so people are going to sell it. Smart money, they sell it off, and what happens? We're below it now. So what is it going to do? It accumulates those longs and it rips up higher. And even here was an interesting one. This was Monday, but again, those no news Mondays are really aren't ideal for most people. I highly recommend staying away from those. But if you did trade those, as you can see here, you're above that midnight open and we sell off. So it's possible you can possibly have a trade there, depending. But keep it to Tuesday to Friday for the most part on those days. And this last one here, let's do this last one. Here we have Friday, July 26th. And as we can see here, you know, price is trading into that premium. We come in a discount. It is a little choppy here. This was, and again, it is Friday. So, you know, not only it being Friday, there might have not been news or something else here. Price trades below that midnight opening, grabbing that discount, and then we go higher. So really, I hope this video was insightful for all of you. You know, by no means this is advice, you know, to trade with a real life funds or anything like that. Simply, I'm just showing you guys something that you could back test and go in and see how you can utilize it with your own strategies or your own, you know, forecasting models or anything that you guys use. And that way you have sort of a framework that you could utilize, a perspective that you're giving towards price that maybe you didn't have before. So I appreciate your time. Thank you guys for watching this video. And till next time, have a good one.